Hi, folks. It's Adrian Zunchik, CMT Charter Market Technician. Lots of interesting things happening throughout the week, and this is an excellent time to wrap the entire price action throughout from Monday until Friday, because this is Friday webinar. Without further ado, let's take a look at the charts and let the numbers do the talking instead of me. Let's actually check what's cooking behind the scenes, because ultimately the markets are suffering. The markets are suffering from big down days. It seems that the traditional finance actually is not really comfortable with the latest kind of like big down days. 1.29% down for the Dow Jones Industrial, S&P 0.78% down. As they're invading, as you can tell, the right upper corner, the rising 20-day moving average. Short-term trends are being tested and invaded. A little bit of a corrective day. Even DAX right here, 0.45%, which is showing relative weakness, arguably, against the S&P. While S&P is rallying and raging right above all of these simple moving averages right there at arithmetic. That's a strong tendency, strong momentum right there. The XLY consumer discretionary 1.02% down. Energy is up 0.18%. Technology is up 0.01%, which is not much. Utilities quite relatively stronger, 0.09%. So it seems that the energy, utilities, communication services, they seem to be a little bit of a safe haven, it seems, while consumer discretionary, ultimately, with healthcare dropping, quite an interesting mixed day. A lot of down, a lot of red, you can tell. For the 30-year bond price is 0.65% down, right there for the index, actually. And the TNX, that 10-year Treasury yield index, is up 1.04% up there. CRB Commodity Research Bureau 0.16% down. Gold again, after the new all-time highs, right again, 24.56, 0.13% down. Silver 0.50% down, while above $30 per ounce. Those are not bad numbers. Those are not bad records. However, there's a lot of bad red price action, it seems, today, right? Cryptocurrencies mixed Bitcoin, and we might want to take a look at Bitcoin directly at this very chart, right? Ultimately, because we're looking at this right moving towards the upper right corner, black curve tail right there is a 200-day moving average, simple arithmetical average that takes an arithmetical average of the past 200-day sessions. And we are back inside of this, inside of this consolidation from 56 above 56 and below $74,000 approximately. 64 is quite a strong and decent push, more than 20% off the lows at 53.5%, 53.5 thousand. My apologies. Right, that's right there with the 200-day moving average as the label note just next to the curve says 59,755. Those are strong rising tendency at the end of the day, right? So even though local slumps, local declines may happen, as it also aligned with the Trump assassination attempt last couple of days ago, we tend to see this and observe this upper tendency for the markets to continue and twirl upwards instead of downwards most of the time. So even though there's been a decent correction in the past couple of months, ever since March, April, ultimately, that it only takes a couple of days to recover for Bitcoin, more than 20% off the lows, 53 all the way to 66,000. That's quite a strong, powerful push. If we are to take a look at more price sensitive data, the latest data is coming from 200-day BPRO trend line is exactly what we're looking at. This moving average is not a simple moving average, right? It's not an arithmetical average. It's more skewed and weighted, biased towards the more recent data, and at the same time, it's more relevant. It works a little bit like an exponential moving average, like an AMA. It's weighted towards the recency, and what it tells us is that ever since the Trump assassination attempt came over, on the July 14th, we actually observed a powerful move. It's 14%, more than 14% from the very day until the peak, local peak at $66,000. And if we measure from the very lows to the peak, it's actually 23.60%. That's quite a significant push right there. And it only took if you think about this, it only took 14 days, while it took 14 days to recover 23%, 24% of the price action, versus actually losing and taking about 127 days, right, to get us ultimately to the lower parts of the $50,000, right? It was exactly 114 candles, 114 days to take us 27% lower from 74 to the very lows. Potentially the low of this correction. However, like I said, we are seemingly entering a little bit of a slower period, right? This B-Pro moving trend line, this B-Pro moving average, this trend line actually stopped rising aggressively, right? It's clearly shifted its momentum. It's clearly shifted its direction right now to more sideways oriented price action on average against this previously rising slope. What it tells me is that it may happen that more and more often we're going to see price action that is a little bit indecisive, right? As it typically happens throughout the quarter three, which is quite often where the volumes turn down when the activity in the market goes lower, where the engagement and the sentiment dip as well, right? As we tend to feel more depressed and more resigned, more discouraged by the price action that just doesn't want to break up ultimately, right? So whichever path we take, it seems that on average we're shifting from the upwards trending tendency on the latest recently skewed data to more sideways, right? And that means that if the market turns sideways, it means that there are oscillations to be had on both sides of the edges, on both sides of the moving average itself, forming some sort of like a range bound environment, right? That's not constructive for the trend. That's not promoting any side of the market, and not neither the bulls nor the bears. It typically seems to be neutral, and that's exactly what happens in August and September, being the two worst months consecutively throughout the entire year. That take us later to the very strong quarter four, to October returning 22%, November returning 50%, on 40% on average, and quarter four entirely returning 50% on average from the last year data, right? So what it tells us is that there is a very strong positive tendency to wrap the year very strongly with the seasonal patterns. There is a Black Friday that typically accelerates a lot of earnings to a lot of companies, that typically boost the price of stocks at times because those companies are doing better. There is, like I said, this decent rotation turnaround in October that typically marks the lows of the corrections for the stock markets. This is typically where the stock markets bottoms out from the major corrections, from the market crashes and from the bear markets, right? So if we are to to take a look at a little bit more classical data, for instance, the RSI, as we can tell on the top, the RSI is right now at about 60.60 units against against the 100 being at top and 0 being a low. The 50-day trend that you can see with this trend line over here is exactly what tells us that there's been a lot of kind of like back and forth, right? Ultimately, it's a mean reversion indicator. It's a momentum indicator with the 50-day reference point, the 50-day benchmark right here at 44 points. We are right above this benchmark, higher above this benchmark at 60 units or so. That tells us that there is this decent burst on the momentum side, right? There was a decent breakout. This breakout seems strong enough to push and take a market at least locally outside of this this local kind of like a slumpy, discouraging environment. Just gave us a little bit fresh air, it seems. Although the ATR indicator, the volatility indicator, that needs to continue in one direction. The volatility, if it is to support a trend, if a trend is there to develop and to continue developing, then there has to be a follow-through on the volatility side. There was a decent breakout that aligned with the momentum breakout as well on July 10th. Although you can tell that on the 50-day basis and a 50-day average, the volatility of the market keeps dipping, right, from April. So past couple of months, the volatility of the market slows down, and if the volatility of the market slows down, so does the market, right? So does the market, and the market doesn't have enough steam in the engine basically to keep going fast, which means it slows down, which means that the previous prevailing trends do not well, typically do not continue as well. For my private trading system, we are on the bullish side. I opened some time ago the long-term positions for, well, just as showed recently, I opened the long-term positions, with Ethereum, with Bitcoin, with Ethereum at 3,100, with Bitcoin at 54,300. Some of which I describe more religiously for all the reasons inside our private Discord community, while at the same time I share all the trades and all the decisions with the screenshots, with the proof, with evidence actually on our Twitter as well. So the bullish stance continues, at least locally. However, like I said, having this prevailing sideways tendency is not encouraging for the bulls or for the bears. So I would at all times remain a little bit cautious, right? And because a lot of signals come in, and a lot of uncertainty, and this typically doesn't necessarily promote continuous changes in the trends, right? At times the markets just continue to move back and forward between the lines, and such as those BPRO momentum bands, right? They are excellent indicator for actual measuring, what the biggest chances of the market are to find inside certain range, right? So we can tell that a very extreme low is 61.4, the extreme high is $67,000 approximately. So we know that Bitcoin most of the time is more likely to oscillate between 61,400, there's in round number magic towards $67,000. I can tell that the direction of the momentum bands also curls to the more horizontal side, to the more sideways type of a direction. And if it means so, it means that we're more likely gonna, at least pause a little bit with the pressure upon the upper boundary right there, upon the upper momentum band, and instead focus to the more kind of like ping pong table tennis back and forth type of an oscillation price action range bound environment, at least locally, right? Because ultimately the greatest chances for Bitcoin are that we're going to move inside of this empty area. This is where the, call it, normal volatility frames are present, right? Before we tap into extremes of the orange band that gives the extreme support regions based on the volatility, and as well as the upper part of the exhausted momentum over bot areas, if you will. So I would, if I were to throw a dart and say, I guess 62, 3, 4, 500 anyway, until 66,000 is more likely the congestion area. So that gives us ultimately the range of prices. If we are to compare it basically from, like I said, 62, 3, 400 all the way to 66,000, 5-6% of the price action possible. And here we are. Let's actually get a little bit of a check for our partners at Soil, right? Again, huge shout out to them. They're incredible people, incredible project, and it seems that a recent token bounce as well seems to be encouraging, right? We are actually 70%, almost 70%, up from the lows, $0.7 all the way up to 1.15. That's a decent push. So congratulations to Soil and their entire team as well. The community seems to be appreciative of the recent market relaxation. Not only that, also of the Soil development at all. That is decent, right? The 200-day BPRO moving average, the 200-day simple moving average, there's a decent congestion if you take a look, right? And those averages may be expected to form a little bit of a resistance area. That is also confirmed because ultimately there is a breakout attempt away, the first breakout attempt in a very long while, actually since April, for Soil token to break upwards, right? It continues to press against this BPRO based resistance. Ultimately, then what it tells me is that, well, if you keep knocking on the door, ultimately they get opened. And that's exactly what may happen with Soil, as long as Bitcoin continues to give a little bit of a thrust and some fresh airs and belief to the traders. And have a quick shout out to our partners at AZERO, incredible blockchain layer out there, building really good things. However, the token doesn't seem to be very strong right here, particularly after breaking the floor of 70 cents right there, right? The traders seem to be downside oriented with a decent drop at 70, almost 40%, 30, 40%. That's a strong pull towards the downside, towards the hell if some people are long from the very tops. All right. Well, typically, technically, when it breaks down certain support level, just like it did at 0.70 dollars right there, 70 cents, it marks a very significant breakout. And if it does so, it gives an information that's valuable information to the traders that something has changed, that some levels have been broken, that some belief part has been broken ultimately, because it means that the commitment of traders has been removed enough to a level and extent enough to actually continue dipping lower, right? That's not necessarily the most constructive thing. For the bulls, there's a decent downward tendency, and as long as actually it travels below 0.62, or even if we take it to a little bit more recent data above 0.53, 53 cents, arguably that might be the bearish orientation right there. And ultimately, last but not least, huge shout out again to our another incredible partners at CREDify, where they're talking actually pushing strongly lately for almost 80% to the very peak, finding this incredible bounce. Again, the magic of the technical analysis, exactly where the previous area of interest was in terms of the resistance, right? Typically, the areas previously that work as resistance, they tend to populate and work, flip the polarity and change into playing the role of a support quite often, right? That is what traders anticipate. That is also what shows us, okay, this was the previous area of interest. It may actually become the area of interest again, however, from the other angle, from the other perspective, right? So having quite a slide, from 0.0, almost 0.06 down to 0.022, 23, it seems that there is a decent push finally at the previous expected anticipated support area, with the breakout attempt over 0.026. Like I said, on a 3-day chart, right? This is a 3-day chart, so take it obviously with a grain of salt, because if we are to anticipate a little bit of the more recent data, some shorter term oriented data, the daily chart actually seems a little bit more bullish right now, because we've just gained a little bit of a stance, a little bit of a breakout right there over 0.22, exactly that level. And as I was saying, we climbed back above the falling 200-day BPRO level. And the trend line, what it tells us that bulls are slowly regaining the passion. The bulls are slowly regaining the strength to climb higher. If we are to give final shout outs, again, this is my great honor to confirm and congratulate to our new partners at Matchain. And Matchain ultimately is, as you know, they are very strong people ultimately for decentralized, scalable AI chain, securing data ownership, the sovereignty. They do a lot of good fight for you becoming the data owner of your own data, and that helps with the help with blockchain and AI and decentralization. Very strong pleasure to welcome them to our partnership. A lot of traders are very passionate about trading. A lot of traders are very inspired to often go and trade and even take up the risks, while they do it even at times without necessity, because there are programs like this one where, unlike most of the other prop desk scams, right, that are going to rip you off the big evaluation fees, that are going to set a lot of impossible to achieve benchmark expectations for you that are unbeatable, that you would have to basically beat the best words fund managers to make any money off of it. We actually created this program of inverse prop desk where there are no fees, there are no evaluation fees, there are no financial risks, because it invites you to trade with us for 90 days for free. And if this 90-day period, if you come out successful, if you show reliability as a trader, it actually allows you to get a contract, that an official, the Birbnest contract with us, start a career with our team, get a salary and profit share from real money from our hedge fund partner, Swiss-based hedge fund partner, spot tokenized Swiss-based hedge fund partner that is called Nomad Fulcrum, with whom we partner up on a strategic level. And thanks to that, you are potentially entitled to gain the profit share from real money from assets under management. And ultimately, if you consider yourself reliable, if you want to give yourself a try without risks, without a chance of losing, you're not risking any money, and yet you can get a contract, you can get a salary, you can get a profit share, join our team, become an official trader on the contract, and well, grow, scale without risk. Consider yourself in. Definitely fill in the questionnaire that is available at the website at the birbnest/inverse prop desk, or go ahead to the Birbnest services and inverse prop desk, and that is exactly what you might want to fill in. Just need to accept the rules, terms, the legal disclosures, disclaimers, and well, I definitely want to see you on the other side. And that's finished for today. I hope you have a beautiful day. Congratulations to everybody if you stick around for long. God bless you all. See you around, and bye bye.